Well, the traffic seems to have slowed. I'll keep my eye open to see who else is coming in so that we can continue to let folks in. But I do want to get us started because there's a lot to get through. I hope you're all fully caffeinated. Finance is usually a hard one to get through, so a little caffeine can always help. Um, Good morning. I'm Jackie Downing. I'm the Senior Director of Grant Making and Nonprofit Support at the Community Foundation, and I'm joined by my colleague, Allison, in presenting this session this morning. So happy that you're here. This is something I've wanted to do for a long time, a session on budgeting, and I hope that you find this helpful. Normally, presenters start with a slide that tells you what we're going to do today. And I'm going to change that. I'm actually going to start with slides that tell you what we're not going to do today, because I think that's important. And I'm sharing my screen so that you can see all of the presentation. We are not going to talk about a lot of financial statements and terms, but I just wanted to go over some of them so that we have a basic understanding. We'll do another finance class. We'll talk about all of these things at another time in another place. This is really not the place that we can do that. It's difficult to get through everything. This is about what we're doing for the operating budget. So I want to make sure that that's what we get to. And I'm trying to move some things around on my screen so I can get to everything all at once. There we go. So what we're not going to talk about, and you will hear these terms as we go through the day in many places, and I just want to sort of leave that foundation. So you'll hear about direct and indirect costs, or program and administration or overhead. Direct and program costs are expenses that are incurred specifically by running a program. And administration or overhead or shared expenses, they're not dirty words. They are a necessary infrastructure for running your organization, and they support the program. So some of them are related to the program, and we'll talk more about that as we go through. When you're writing a grant, you should always ask for at least 10% in administration. Not only in our grants, but in others that you apply for. Never say your program is going to be 100% money goes into the program, because it's just not true. It takes money to run the program. So make sure that you're asking for appropriate funds. And the key to that is to make sure that you are allocating as much as you can to programs, things like telephone and insurance and advertising. Some may be directly program related. Some may also be overhead or administration. We'll talk more about that as we get through, but the more you can actually directly relate to the program, the better for you. And in-kind, we're not going to talk too much about that today. In-kind impact on your budget are donated goods or services that do not involve the exchange of money. Your board time is never counted as in time. That is expected as volunteer service from your board. So if you have a lawyer on your board and they do a little bit of legal services, you can't count that as an in-kind donation. But if you have a pro bono attorney that is giving you services, that can be counted as an in-kind donation. It's always good to put in-kind things like rent if someone is giving you space, or if you're a food pantry or a book bank, people are donating goods to you. To add that in, I'm going to use an example. Back in the day when Connecticut Food Bank was independent, it had an operating budget of $11 million. So when it went to funders looking for, let's say, $1 million, funders were saying, that's under 10% of their budget, not bad. Their cash operation was $4 million. So if they went to a funder, and 7 million was donated goods. So if they went to a funder and said, can you give us 1 million on a $4 million budget? The funder would say, whoa, 25% of your budget, that's unstable. That's not good revenue diversification. No, we're not going to do 25% of your budget. But by adding the in-kind in, that showed that they had a larger operation and it made it a lower percentage. So where you can add that in, it's helpful. It also shows funders that there are others that believe in your work, that are willing to donate their time or treasure to your organization. So it says a lot about your organization. We're also not going to talk about program budgets. We're not asking, we are general operating support grantee. We are asking for your general operating budget. We'll talk a little bit about program budgets to see how you see it fits in, but a program budget is so that you can see the income and expenses of one program. You might use this for a program grant that you're applying for. Again, be sure to include administrative expenses in that. You might use it on a different application. It also helps you understand where you're making money and where you're losing money within your organization. The profit and loss statement. This is based on your operating budget. You look at it at the end of the year, and it could be monitoring as you go along during the year to see, are we on track with our budget? Did we bring in as much as we thought we would? And did we spend more than we thought? So the profit and loss is where you are in the year, look at the year-end activities based on your operating budget. The audit is something that you have an outside CPA do. If you are an organization with an operating budget of $1 million, you are required by the state of Connecticut to do an audit. If you're an organization with an operating budget between 500 and 1 million, you must have a CPA do either a review or an audit. And if you're under 500,000, an audit is not required. Within the audit, you're going to see things like the statement of activities. That it's like a profit and loss statement. It tells you what you did during the year, but the accountant will break it up into program expenses, fundraising, and administration columns. And that appears and mirrors what's on your 990. The balance sheet, unlike the profit and loss or the statement of activities, it's a snapshot of your organization's financial condition at a point in time. So a profit and loss, the operating budget we're going to talk about is your 12-month fiscal year. The balance sheet is, this is how much I have in the bank. I made money last year, I put more in the bank. I lost money, I took money out of the bank. These are my assets, these are my liabilities for the year. We're not going to talk much about that today, but I wanted to make sure that we understood the balance sheet is another thing that happens up in your audit. And then the 990. Everyone must file a 990. If you have less than 50,000 in income in your organization, you have to file the 990N, which is a postcard. If you have gross receipts less than 200,000, you can do an EZ, 990 EZ, but if you're over 200,000, you must do the full-fledged 990. So everyone has a 990. What we are going to talk about today, why we're here today, is the annual operating budget. The annual operating budget is an instrument that the board and the staff create prior to the fiscal year start. You should be taking a look about 3 months before, 2 months before your fiscal year begins to say, what did we plan last year? How are we doing against that plan? What do we think is going to be different next year? Are we bringing in new programs? Do we know we're losing a grant? Do we know we're getting a new grant? Are we doing a special fundraiser? Are we adding a program where there's going to be additional expense? The board and the staff work together to create the budget. Then they use that annual operating budget throughout the year at every board meeting to monitor the expenses and income. Are you on track? Do you expect to end the year where you thought you were? Are you spending a lot more money in one category than you thought? How are you going to offset that with income or reducing expenses in other categories? It's really used as a monitoring tool. The annual operating budget, once your board has approved it, does not change. If suddenly you got a new grant, that becomes a new column that's a variance. So your income suddenly is greater than you thought it was going to be. But I would imagine that with that grant, there's also going to be expenses that you hadn't anticipated. They're going to offset each other. When you add a new income source, you have to add the expenses that go against it. You can break the program out by budget, and we'll talk a little bit about that. But today we want to talk about the annual operating budget because that's what the foundation, our foundation, is looking for when you submit your application. Budgets always include income and expense. That may seem basic to some people, but we have seen budgets that only show us what the expenses are. you must give us a budget that shows your income and your expenses for the 12 months of your fiscal year. And we hope that it balances. It doesn't always, but sometimes, most of the time, it should be a balanced budget. You should know how much you expect to spend and where you're going to get the money for all of those expenses before you come to us. Now, you may not have the commitment on all the granting, but you should pretty much know who you're going to be asking or where you think you can get it from. You have to make sure you base it on reality. If your board raised $20,000 last year and you put in a line that they're going to raise $100,000 this year because that balances your budget, where's that $80,000 going to come from? Is there something special in there? So make it realistic. Some budgets do have a planned surplus. You may be building a reserve to do something in the future. It's okay that you have a surplus. Nonprofits can make money. They just can't go home with the shareholders or with the employees or with the board members. It has to get invested back into the organization. So if you plan a surplus because you're building a reserve for stability for the organization or for a particular future project, just explain that in the budget. We're building a surplus for X. You may also have a lot of money in the bank and you may plan a loss. You know, we've built a reserve. We have 12 months reserve. We don't feel like we need 12. We're experimenting with a new program this year. We will not have the income to offset it, but we're going to take a risk, try this new program. We're planning on a loss. We've got the money to do that. Again, just explain it when you tell us about it. Didn't switch. There we go. Operating budget, program based. So I am going to, oh, you know what? I'm going to stop here. Yeah, here. So in your operating budget, you're going to see personnel and other than personnel expenses. You're going to see direct, indirect, or admin. And you're going to have the budget itself and a narrative. The narrative that you write against the budget will help you remember where the budget numbers came from next year when you set out to create the next budget. So I am going to get out of this and bring up a budget form, which we will share with you. Okay. So this is on this form, we have a few different, when we send this out, we will be able to, am I no longer sharing my screen?
No.
No?
No.
Now do we have it?
Yes.
Okay. So this file that we will send you has 3 tabs. A sample budget, which is what we're going to talk through now. A sample narrative, which explains things, and then the budget template that you can use to create your budget if you would like to do that. So we're going to start with a sample budget. I'm going to go to personnel first. Let's say you've got an executive director who gets paid $60,000, program director, development director. These are the people who are your full-time employees. You always want to make sure that you put in their taxes as well. So here, there is a calculation for taxes and fringes. I'm going to go to the narrative and explain what's done here in this category. So the executive director, $60,000, that's what we pay the executive director for a full year's of employment. Program director, we pay the program director $40,000 for the full year. We're hiring a new development director. Our fiscal year starts January 1st. We're going to bring this development director in on April 1st, which means they missed the first quarter. So I'm only going to show $30,000, even though next year I'm going to pay them $40,000. But this year I'm only going to be hiring them for 3 quarters. So I'm paying them $30,000 in this 12-month snapshot. Remember, this is a 12-month snapshot of what's happening in your organization. Now, every organization pays 7.65 in FICA withholding, that's Social Security and Medicare. You have some employees that are full-time, you may give health insurance or disability. You have to pay unemployment tax for the state of Connecticut. All those things get added up. And that's maybe 26% of those full-time employees. This will do the calculation. This template will do the calculation for you. Now I've got some part-time people. I've got counselors that work in my program. I pay them $18 an hour, 10 hours a week. They work a 30-week program, and there are 5 counselors. So for the year, this is how much I'm going to pay them. And I have a development assistant. I pay them $275 a week for the whole year. And I pay a bookkeeper $308 for 52 weeks for the whole year. So this is what I've got. Now for them, I also have to pay the withholding and I have to pay the Medicare. They may not get health insurance because they're part-timers. So their fringe rate is 10.5 because you still have those taxes to pay. So let's go back to the sample budget. This will, for you, give you the total full-time wages and the fringes based on the percentage you put in, the total part-time wages and the fringes based on the percentage you put in, total salaries, this is what you're paying personnel, the total fringe, and here's your total personnel cost. Then we scroll down to non-personnel, other than personnel services, OTPS. This has lots and lots of lines in it, and you have to make it very personal to your organization, as you can with this as well. You can add lines here, take lines out. If you don't have any paid full-time staff, just leave it blank. If you're not hiring people as employees, skip down here and put in contract labor and guest stipends, and then put in the number. Whatever number you put in, make sure you go over to the narrative and say, this is why I came up with this number. So within my program, I'm going to have 10 guest speakers. I'm going to pay each of them $100. So my contract guest labor or guest stipends is $1,000. I'm going to send some people on trips. I'm going to buy some books. I'm going to buy some consumable supplies for my program, $2,000. These are all the things that are relevant for what I'm doing. You have to make sure you add in here everything that you spend money on. So take a look at what you did last year and make sure it's all covered someplace. Now, these are program-specific expenses. You'll see in here insurance certificate. I'm sure you have for your organization general liability insurance. You have directors and officers insurance. That's fine. But if you have a program that has a high risk, like you take kids on field trips, or you're doing kayaking, or you're offering alcohol at a program, you're going to have to pay above and beyond for that specific activity. That's a program expense. You should show that cost of that piece of your insurance in your program-specific expenses. Telephones. You may have an office telephone system. You pay that office telephone system out of the administration piece, but you may have outreach workers and you give each outreach worker a cell phone at $200 a piece because they have to be in contact with their clients 24/7. That's a program specific expense. Make sure it shows up in the program specific area. You have van maintenance. You only use the van for the program. You don't use the van for administration. So it's program related. You buy gas because you're taking people on trips for your programs. You may do training for program staff. That's professional development specifically for program. We get down to shared expenses, the administration, the overhead. You're going to see so many of the same categories. There's insurance, that's the directors and officers and general liability. Doesn't really get attributed to a particular program. Utilities, now here we've got telephone again. The office system is going to get charged to administration. You need to do, if you have more than 3 employees, you have to do sexual harassment training. That would be a general expense, not program specific, but it's a general expense. You may be paying back a loan. Those are all things that will be in here. I put depreciation in on purpose. Depreciation is something that your auditors or your CPA will throw in. If you have equipment, they put depreciation in there, and they lessen the value of your equipment on an annual basis. And some folks say, well, if I can balance my budget without depreciation, then I actually don't have the cash going out, because this really isn't cash going out. But if you balance it with that in there, what that's doing is helping you build a reserve. So let's say you bought a bunch of computers last year. You spent $5,000 on new computer hardware. They're going to build in depreciation because the computer's life is 5 years. They're going to build in $1,000 a year depreciation. If after 5 years you've covered all that loss of equipment, then you have a $5,000 reserve to replace the equipment. If you balance your budget with that as an expense, as a loss, then that's going to sit in the bank. That's a little harder to understand. Alice, I'm going to ask you to monitor the chat. So if there are any questions coming in, and if you have questions, please drop them into the chat. We can stop. So once you've gone through the personnel, the other than personnel program specific expenses, the shared expenses, your administration or overhead, you get to the revenue. Where's the money coming from? Foundations, corporations. You may have had a restricted grant left from last year that you can now use the cash on. That's what this comes from. Government grants and contracts, investment income, program revenue. Do you sell tickets? Do you have registrations? Do you have fees? That goes in here. And again, change any of these things as you go along. So this is the sample narrative, and this is the narrative. So notice I've put here, I'm going to do $35,000 in special events. Wow, it's a big number. What's it come from? It's $25,000 on the gala, and I'm going to do a golf tournament, and I'm going to raise $10,000. If I'm preparing this budget again next year for 2025, and my gala only brought in 15 and my golf tournament did 30, I'm going to revisit that number and say, what do I think I can do again next year? Or is my golf tournament only every other year? This is going to help inform what I do next year by having this narrative. So here's the sample budget. We just walked through the narrative piece of it, all the shared expenses. And again, you change what's in here, put in things that are relevant to you. It will do the calculation for you. Here are the shared expenses. Here's the other than non-personnel costs. Here are your total expenses. Here's the revenue. Here's your total revenue. And here's the total expenses. Pretty close to the same number. Balanced budget.
Jackie, there's a question in the chat from Mark. If you have 3 different programs, should they be listed 3 different times?
On your annual operating budget, no. You have one annual operating budget that gives you your total expense and total revenue. But I will bring up I'll make it really confused. So when you're submitting when you're submitting to the Community Foundation, what we're looking for is the annual operating budget. We do not need it broken down by program. We're giving you general operating support. You use it for your programs. You use it for your toilet paper. You use it for your ice melt. You use it for a consultant. You do whatever you want with it. Fulfill your mission. You've done your job. We've done ours. For your sake, here is a budget form that does the calculation of your annual budget for you yourself. So let's say you've got 3 programs. You've got a summer, you've got an after school, you've got a teen group, and you've got a mentor match. Now, my executive director makes $60,000. They spend 15% of their time doing the summer. They spend 15% of their time doing after school. They spend 15 in teen group. They only spend 5 in the mentor match. They spend 10 in administration. At some point, I'm going to get and they spend 15 in fundraising. That's only 75. Well, let's make this 30 just for the sake of that. So now I know where my executive director spends their time. It's done the math for me. I can do the same thing here, following the same categories. My summer program, I'm going to spend $5,000 on the summer program supplies, but I'm only going to spend $2,000 on the after school. And I'm going to spend $1,500 in the teens. I don't have any expense program supplies in the mentor match. There aren't any, this is direct program now, so I don't have any administrative supplies for mentor match or any administrative supplies for fundraising. So this is now starting to show me what my budget for the summer program is. I'm spending $9,000 in personnel. So far, I'm spending $5,000 in specific program specific. Then I'm going to take a percentage of the shared expenses, and then it's going to show me what my true cost of this program is. Then you also have the opportunity to put the revenue in. On a separate tab, you've got the revenue. It brings it over. So it just brought over everything we just did. Now you drop in the revenue to say, this is the money I'm bringing in for this summer program. Oh, look, it cost $14,000. I got a grant for $10,000. Where am I getting the other $4,000? So I will also supply this. I don't want to spend too much time on it. It's a fabulous, fabulous tool. And I will tell you where it came from, because that's coming up on the next slide. And it came from Strong Nonprofits. Strong Nonprofits is by the Wallace Foundation. It has in it all of the budgeting tools that you need, so that that program-based budget is right here. You can download it for free. It also has a lot of monitoring. So setting up your budget, and there's a great guide here about how to set up the budget, the 5-step guide. If you're at the very beginning stages, you can set up a guide as to how to set up the budget right here. If you're a little more sophisticated, you can do that program-based budget here. Lots of different resources there. They also have cash flow statements. We're not going to talk about that today because that's not part of what we ask about, but you should know when your money comes in. If you're seasonal or cyclical, or you have a summer program, you need to know that you're making your money before the summer program launches, so you can pay those bills over the summer. This is a fabulous resource. The link will be in the slides when we pass them out. So I am going to go. Any questions on this operating budget? So what you will get is this. You'll see sample budget. I filled it in with arbitrary numbers. The sample narrative, which explain all the numbers that I made up. And then here's the template with just a couple of little hints about, what's the percentage of wages you pay, of the wages that you pay. Full-time positions, this calculation is automatic. You only enter things in the spots that are yellow. The rest of the grays do their own calculations. Program specific, make it personal, make it whatever you need. Plenty of columns, no reason not to break it out as much as you need it to do. Shared expenses, so you know what the whole operation of your organization looks like. And then it will do the math and tell you what your total expenses are for your organization for 1 year to run the whole organization. That's what we're looking for, because our grant is general operating support. And then revenue, where's all your money coming from? And we never want, names of people. But if you have, an annual appeal and you send it out twice, you may want to list 2.
Jackie, there's a couple of questions in the chat. Mary wants to know if it's all right to submit more condensed versions to funders. For example, they have 15 full-time staff. Do funders like to see a list of each staff person's salary, or can they consolidate that?
That can certainly be consolidated. This is for you to create your budget. We don't necessarily need to see this whole thing, but for you to have a good understanding of what your annual operating budget is, this gives you that best sense. If you just want to give us the sort of highlights of that, so we understand where you're spending your money on personnel, what you're spending on direct program, what you're spending on administration, and then where your money's coming from. For us to know who your other funders are is important. We like to know what those sources are, whether they're confirmed or whether they are, grants are secured or whether they're pending. So it does not have to be to this level of detail.
And we'll just clarify too that you don't have to use this template. The Community Foundation is not requiring this template. This is a tool for you, especially if you don't have a budget prepared already. This could be very helpful to you. So we'll be emailing the templates out to you, but they're not a requirement, which was another question in the chat.
That's
and
correct.
There was a question about the difference in this type of budget versus statewide or regional, which is a perfect segue. John Michael Parker has joined us, and we will be talking about that shortly.
Yes, in fact, that is the next slide. So I'm going to go on to back to statewide. So now that we've created the annual operating budget, it's going to be much easier to take a look at this. The annual operating budget, I will tell you that all community foundations are going to want this information from you. We are all very site-based and very site-specific. Our funders for 95 years have given us money to spend on the people of Greater New Haven. We cannot say to those donors who gave us money in 1942, well, we've increased our area, we're going to give to Bridgeport now. Not what the donors gave us the money for, so we will, for in perpetuity, steward their wishes, and that's the area that we're going to do. All community foundations operate the same way. You have to also know the grantors' regions. Particularly difficult here in Connecticut, where we have 169 little fiefdoms, where we have counties that don't really exist. They haven't existed since 1960. The state has now just turned and dispensed with the county idea, and they're going with the Council of Government Regions. There are 9 of those. Community foundations don't match any of those. The health districts don't match any of those. The educational districts don't match any of those. So it's really, really hard in the state of Connecticut. I apologize. But the Community Foundation for Greater New Haven is 20 towns. Most are in New Haven County. Shelton is not. It's in Fairfield County. We don't include Beacon Falls. We don't include Waterbury. We don't include Meriden. Those are. They have their own community foundations. So they're served by others, not us. So know the grantors region that you're talking about. Some direct costs are attributable to the region, and some are based on percentage. And I'm going to let John Michael Parker, when Arts for Learning Connecticut submitted their budget last year for the statewide, I happened to be the reviewer on it, and I went back to John Michael and I said, John Michael, can you teach a class on this? Because this is really awesome. And he said, sure. And then I called him this year and I said, could you teach a class on this? And he said, you really meant it? And I said, yes. So John Michael, thank you for taking the time out of your day. I'm going to stop sharing for a second so everybody can see who you are. And I'm going to bring up pretty much your budget from last year and the way it was submitted. And then you can talk to us about your thinking behind it. Do I have you?
Yes. Can you hear me okay?
Yep.
Awesome. Hi, everybody. Thanks for that intro, Jackie, and thanks for the chance to be here. Definitely happy to talk through my thinking in terms of how we develop that budget with the focus on the region. I think the points you just highlighted are a great place to begin. And I, as an organization that serves across the state and has been funded by a number of community foundations in different areas, will just first uplift the fact that, yes, I've found this to be applicable to all of them, and the kinds of thinking that I really have worked on here with your support, Jackie, have benefited us when we're working in other areas. So hopefully these are skills and ways of thinking that will not only benefit everyone's work with the foundation, the Community Foundation of Greater New Haven, but others too. So Jackie, I think you said you're going to share your screen. I don't see it up yet, but tell me when you're ready.
Should be there now.
I see it. So I think the first thing I'd say, and I'll tell to everybody, you know, I'm grateful that Jackie said that what we did seemed like it was worth sharing with others, but I also want to give credit where credit's due. Jackie, as a thought partner and sort of guiding me to figure some of this out, has been really helpful. So actually, Jackie, I'm going to start with a couple of points that we had discussed, which is I think there are a few different ways to approach coming up with a regional budget, both in terms of revenue and expense. And I'll kind of pull those apart and treat them separately, revenue and expense. But I think first, just to outline those 4 different paths, I think really what we're trying to come up with is, given your statewide budget, which, as you just had sort of walked through how to come up with, how can we allocate revenue and expenses to the region? And I think it's really dependent on how you folks collect data within your organization. I think for me, every time I go back and do this, it's like immersing myself in how we collect data and what's available and how to best manipulate it. And so a lot of that's ultimately going to be really dependent on your organization. I'll say for us, we utilize Salesforce as a tool for contracting and also for demographics of our clients served. So really briefly, we are a statewide arts learning organization. We bring teaching artists into K-12 schools and other community institutions across the state to provide services primarily to young people, but also to educators. And every time we have a program, and so we do hundreds of programs a year, we serve over 100,000 kids across the state. Every time we do a program, there's an individual contract that's created in Salesforce. And so we're able to peg that information to a location, which is helpful for this regional work. We're also able to peg that to costs. So we know what it costs to pay the teaching artists to do that program. We know what revenue was associated with that. And when we look through Salesforce, there's all different ways to utilize that tool to slice it in different ways to find out what's going to be helpful. But for us, really, and I think the first thing I'd say is thinking through how your organization collects data programmatically and also financially, that will inform the strategy that you want to come up with for creating this allocation. So that said, when I realized, okay, we've got Salesforce as a pretty powerful tool to help us find this information, it was really saying, let me come up with a percentage that I could then apply to most of the lines in my budget that would sort of speak to how my overall costs and expenses and revenue can be allocated into the region. So I think there's a few ways to think about coming up with what that percentage is, what that sort of really key translator is going to be. And for us, what made sense was to look at the percentage of clients served that are in the Greater New Haven region. So we serve over 100,000 students every year, as I said, and we can use Salesforce to come up with a literal per town count. So I can take all of those students that we serve and put them in. For us, it's about 70 different towns across the state. And then I can add those up, the towns that, as Jackie said, are in the 20 towns in the region. And then I get a total student served in the region versus a total student served in the state. I divide those, and that's where I came up with, for us, like the really key metric here, which is 35%. So 35% of the students we serve across Connecticut live in Greater New Haven. I'm then going to use that to apply to my budget to try to get a reasonable allocation of costs. So that first strategy, again, is to think about the folks that you serve, where they live, and coming up with a percentage of those that are in the region. Depending on how your organization collects your data, like I said, you might choose a different pathway for it. So you could think about program expenses dedicated to a region. So if it's easier for you to say, hey, we've got 3 programs across the state, 1 in the region, 1 in Fairfield County, 1 in Eastern Connecticut, And based on how you run your org, you know what the costs are for each of those 3 programs. You might say, okay, the New Haven costs are, 40,000 of my overall $100,000 cost. So 40% is what I'm going to use to allocate a lot of this. That might be what your data shows. I know, Jackie, when we talked, you also mentioned the idea of the percentage of employees working in an area versus working in a full organization. So if you're set up so that you have your employees really geographically bound, that might be a way to do it. That didn't make sense for us because our employees serve all over the state and sort of in different areas. So we don't have people that are defined regionally. So I couldn't use that as a way to try to come up with the calculation, but that might be something that works for you folks. And then I think the last way we had talked about it is you could really try to go through line by line by line and think about what's actually behind that expense and revenue and allocate it. But that might be tedious. And for us, with, as you see, I don't know, 70 plus maybe lines in our budget, I think you condensed all of our employees, so that was helpful. Yeah, that that just wasn't going to be practical. So again, what we came up with was 35% of the people that we serve across Connecticut live in Greater New Haven or in the region. And so I literally just, in my spreadsheet, took this column, multiplied it times 0.35, came up with the next column, and then went through and sort of did a rough check to see, okay, does all this make sense? And are there areas where it's obviously one versus the other? So I'll say sort of one more thing and then I'll pause here. I think about it slightly differently from an expense and revenue side. So for the expense, it was pretty straightforward. We can really allocate that across the board. It's certainly personnel because our time is focused on where our students are. So if there's more students in a certain area, we're spending more time there. If there's less in another, we're spending less time because there's less work to do. So that sort of made sense. And a lot of the other things in our budget, in terms of artist expenses, we're paying them for those programs based on the amount of students that they're serving. So that sort of checks out. And then it felt right to allocate our consultants, our payroll services, computer hardware, these like small pieces, our rent even. So our office is in Hamden, so it's in the region. So on one hand, you could say, okay, it's based in the region. Let me allocate all of that to this budget. But I think, as Jackie said before, you want to be consistent with your approach here. So it wouldn't, given that that was sort of my paradigm here for using an allocation according to percentage of students served in the region, that wouldn't be accurate to say all of the rent goes to my regional cost, because when I'm sitting in that office in Hamden, I'm still sometimes doing work that serves Fairfield County or New London or Ashford or you name it. So it's really sort of across the expenses. I think being consistent, if you're going to use a 35 metric, use that and just make sure it checks out as you go down. So Jackie, if you want to scroll quickly, I don't know that there's anything else that necessarily needs to be lifted up there. I think it makes sense to think about allocating our insurance costs, allocating our memberships to chambers. There's probably even more detail in this budget than you all need to see, but this is how we set it up and how it makes sense. So the 35% really was a good way to, I think, set that up. If you could scroll back up to the top and look at revenue, this is the one place where I would say I didn't use quite as simple of a 35% because I could actually be more accurate in a meaningful way. So as I said before, we, because of the way that we utilize Salesforce, we can figure out how much revenue is coming for programs that are located in those areas, and then sum that up across all those different contracts. So if you see on line 22, we have an earned revenue for performance and workshop. That's an actual number. I mean, again, this budget, I should have said this before, this budget was created for the future fiscal year. So it was actually sort of based on assumptions that came out of actual information from the previous year. But I really got to say how much earned revenue is coming in for specifically these programs, and then utilize that to sort of forecast forward what we'd look at for this next year. And similarly for foundations, when we are getting up on line 14, our restricted foundations, when we're getting grants from foundations, I can actually go through and say, hey, I'm applying for funding here that's serving Church Street School in Hamden or Roberto Clemente in New Haven. So we can be pretty specific and connected there. And then there are some pieces of this, like our individual contributions, our corporate contributions, that made sense to sort of use the more general allocation. So for me, I was able to be a bit more specific when I was going through the revenue. All that said, though, I think even if it was as simple as this is the metric we're using, 35% is sort of going out in the region, you might say that that makes sense coming in. But for me, it was worth kind of zooming in a little bit more there. So as I've been talking longer than I wanted to, Jackie, let me pause. Feel free to let me know if there's anything I haven't shared yet or things that you want to push me on, or I'd be happy to see if folks have questions that they're thinking of.
No, I think that was great, John Michael. Thank you so much. I'm sure there are questions. So I mean, the first 40 minutes that we spent was on the total operating budget. You can see that that was the first column, even on this, was that basic annual operating budget. And then the statewide, the regional expenses. So when we say program, we're not talking about one program of what you do. We're talking about the operation that you do in Greater New Haven as your program expense. Perfect explanation. So, will their budget be included as an example in material shared? Yes, we will send that along with all of the other templates and the slides. The slides has the link to Strong Nonprofits if you'd like to go that step further. This was a lot to get into to a short session. Questions about, thank you, John Michael. That was really, really clear, really good. I was impressed with the budget last year. I'm still impressed. It's still, I think, the best I saw come in of all of the grants, and I read all of them last year. So I think it was really clear for us. So thank you. And I hope it makes it clear for folks. Any questions about anything from this morning? Anything you want to go back and revisit? I know we went very fast. If I went over something too fast, there's probably somebody else in the room thinking, I wish she had gone slower on. So please ask the question. We talk about multi-year as well as single-year budgets. No, we're asking for only one budget projected. So you can let us, if you are planning within the 3 years, if you're applying for 3, if you are planning within the 3 years to launch something new in the second year or the third year, and you have some plan, talk about that in the narrative, talk about that under your outcomes. And in the budget section where you have the opportunity to explain some things about your budget, because we'd love to know what your plan is and how it fits in with your strategic plan. And when you speak with a reviewer, you will all get the opportunity to speak with a reviewer that's assigned to you. Make sure you talk about that, about what the plan is and why you may be asking for a certain amount in the first year, but then a balloon in the second year. That will help. So 10 minutes left, we can go over things. We will be sending out the program-based budget, the wide sample. We'll be sending out this Arts for Learning budget. We'll be sending out the operating budget sample, narrative sample, and template. As a
Jack, can I
chance.
ask you one more thought really briefly?
Yes, Jen.
I just wanted to say to folks that I have found almost every time I've asked for feedback from Jackie or from others at other foundations and other partners, is that simplicity is a great value. And so as I was looking back even just now at earlier drafts of things, I mean, we had developed a program-based budget that had multiple programs and then fundraising and G&A and all these different ways to look at our expenses. And ultimately, I think we came down to simplifying with the one column. This is what the budget is. Again, as I mentioned before, I almost feel like there's too many lines in there for what this is going to. So if I was doing it again, I'd trim that up. But I find that as an organizational leader, we're in the details and the complexities of everything that's going on with our teams and our work and our programs. And the simpler a story we can tell, I think the more effective. So every time I wrestle with, should I include this extra detail? I try to find a way to not, or to simplify it as much as I can and really have the overall come through. So I hope that feels relevant on your side too, Jackie, but I'm someone that needs to keep editing and paring down and simplifying, and then hopefully that gets to a strong place at the end.
Yeah, and I think for a good, strong organization that is stable and solid in its programming, that simplicity is the best. But for organizations that may be struggling with transition, particularly coming out of the pandemic, or just launching new programs, if you do that program-based budget where you have one column per program, it really gives you a true picture of where the loss leaders are, where you're bleeding from your organization, and then you have that, that conversation with your board that says, we're losing a lot of money on this program, but this is a core to what we do. This is why we're in business. So how do we raise the money to make this work? And you have that conversation. You may see the same thing in a program that, you started a bunch of years ago and you just keep doing it because you've been doing it for a long time and it's the history of the organization, but it's no longer really that relevant and it's losing money and you've got a lot of new things that you've added in. This may say to you, whoa, wake up call. We're losing a lot of money on this. What if we got rid of it? Would that help strengthen the rest of the organization? We would not be losing money on that. So that's where a program-based budget can help you have those really tougher conversations and make strong cases if you're going out for program funding. Getting money from a municipality, and you say to the municipality, hey, we really love your $15,000, but it actually costs us $22,000 to run this program. You're not making it. We're not be able to provide these services for what you're giving us. It gives you a real good concrete example to show them where the loss is.
Yeah, that resonates with me for sure. And to be clear, we do a lot of rigorous program-based budgeting to the point that it drives my bookkeeper a little. It takes a lot of time to do it, and I find that for internal work, it's incredibly helpful. So maybe my comments are for the way that you communicate that on an application to a foundation and really trying to make that simplicity in your outward. So it's always you're telling a story. Again, I think a lot of this as an organizational leader, your budget is a strategic document that shows your values. It's how you tell your story. It's this. So I think finding simplicity in that, but certainly maintaining that detail internally. But sometimes it's like people don't need to know all that stuff. So I think that's we're always walking.
Yep. And we don't ask for that level of detail. That's an internal tool for you, something useful for you, but we're looking at that general operating budget. And it looks like an awful lot of work to set it up. For those of you who are just emerging in new organizations who don't have that already set, once you've done it, it makes it so much easier the next year. Then it's tweaking to say, wow, we anticipated this, but it didn't work very well. We came in way short or way over. So what are we going to do next year? How's our budget going to look different next year based on the reality, the actuals from last year? And it gives you a chance to say, this is where we're starting from. This is what we actually did. So therefore, this is where we're going to in the next chapter of the next fiscal year. It also helps you monitor what you're doing mid-year, because if expenses are way up in a certain area or a line and you see things going way out of whack in one particular line, and you don't have a source of income that's covering that, it gives you the chance early on in your fiscal year to understand how you're going to offset that, either by reducing expenses in other lines or by increasing revenue. So it doesn't leave you at the end of the year saying, oh my gosh, how do we spend so much on that? So if you're monitoring that on a regular basis and your board is watching over that, it gives them the information they need. So we are just about at time. If there are other questions, we do still have a few minutes left. But if not, we can move on and make sure that we get those resources. I see some things. Oh, the consultant support program. Yes. If you are having trouble, yeah, I will always plug the consultant support program. We have a program which is modest funding to help you bring a consultant into your organization to help you with one small discrete project. The funding only goes up to about $2,000. It's, you know, you're not going to get a strategic plan from this. You're not going to get a complete fund development plan. They're not going to redo your chart of accounts and set you up in QuickBooks. But if you need a thought partner on just a little something, somebody to run, an expert to run something by, the consultant support program can help you with that. Reach out to Allison. Allison can pop that through and we can get you someone to work with you. And that's not only in finance, but it's in every area of your operation. It's in board development, it's in IT and marketing, and anything that you really need. And I don't see any other questions. Did we miss any questions? If you had dropped a question into the chat and we haven't gotten to it, please just unmute yourself and ask.
Hi, Jackie. Thanks so much for this awesome webinar today. I had a quick question just about the program you just mentioned, the consultant support program. Is that just for organizations located in the greater New Haven region? We're in Hartford at Everyday Democracy, and so I just wasn't sure if that was something that we could also apply for.
It depends on how much of your service is done in this region.
Okay.
And you'd have to be able to have a lot of backup to show us that the New Haven folks are involved. Greater New Haven folks are involved. And that's really with all of our funding. You're making a strong case for any organization that's not based here has to make a strong case for its local presence. If there is an online organization, you know, I have a website and everybody who wants to can come to our website, that doesn't usually cut it. Because yeah, anybody can go to it. We have no way of knowing who in New Haven, but if you run workshops, have groups in New Haven, specific things, if your fundraisers happen here, if you have a presence or an office or hold office hours or have a partner that you work with in this community, that makes the difference. And we're just about at time. So thank you all for coming. Thanks for a jam-packed hour. Thank you, John Michael, for making the time to present that clear and wonderful statewide budget. We really appreciate that. And look forward to hearing from all of you soon. Bye-bye.
Thank you.
Thanks, Jackie. Bye.